Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be discussing U.S. retail sales and the potential reaction in markets and the U.S. dollar. So Rafi, back in February, retail sales fell by 3%. Since then, though, there has been another round of stimulus payments and an improvement in the COVID situation. So what are we expecting for March retail sales when it comes out on Thursday?
So Maria, that is right. So we did see that dip back in February, but of course in March we had another round of stimulus. We had the $1.9 trillion stimulus package by Biden being approved by Congress, and we started to see the $1,400 stimulus checks rolling out. So we are expecting a big jump in March, and of course in February there were other issues holding back retail sales, such as poor weather. So we didn't have a similar situation in March, and on top of that we did see a further drop in COVID cases across the United States, and several states did ease their restrictions. So overall, we are expecting a big jump in retail sales numbers. Forecasts are for 5.9% month-on-month increase. So that should pretty much confirm the improving picture in the U.S. recovery.
Okay, we just had some pretty strong inflation data. If the retail sales numbers also turn out to be stronger than expected, what reaction are we likely to see in bond markets and in the dollar?
So it's interesting to see what happened, first of all, with the inflation numbers. There was a slight beat in the actual numbers. So U.S. Consumer Price Index did jump to 2.6%. Year-on-year forecasts were for 2.5%. But nevertheless, we didn't see a huge reaction in the markets. There was an initial spike up in the dollar and yields, but then we saw both yields and the dollar falling quite substantially because although this was a big jump, I think markets are now starting to believe the Fed when the Fed says that this increase in inflation will be temporary, because we do have that very low base effect from last year when we saw inflation plummet on the back of those first round of lockdowns. So once that effect subsides, and we also see some other temporary effects also fall out of the calculations, expectations are that inflation will moderate. So we didn't see huge reaction in the inflation numbers, and so that suggests that markets we probably want to see a very big surprise before being rattled quite substantially. So that might be an indication as to what to expect from the retail sales data as well. So unless there's a huge upside surprise in retail sales on Thursday, we might not see a huge reaction in the dollar either to that data. And investors will probably want to see how the data evolves in the coming months, whether the boom in U.S. consumption and the uptick in inflation pressures will be sustainable, whether they will ease back, because only then we could see treasury yields starting to rally again, and that in turn, of course, would also lift the US dollar. But until then, until there's a clear sign as to whether or not this surge in US growth and US inflation is going to be sustainable, we might see the dollar trade sideways until there's a clearer picture.
Rafi, thanks so much. And thanks for joining us at xm.com.